There is no better time than wanting to become a day trader than right now, especially with all the Trump tariffs, especially with everything that is happening where everything is being raised in price. Wouldn't you like to be able to take one single contract of $28 to over $626 per contract? Simple as that. And I will explain to you how I took every single trade to that trade right there. As we start off, we're going to look at a higher time frame of the 5 minute to decipher what is going on and what type of downtrend or uptrend are we on currently. As we can see, we have been facing a major downtrend as we were at the high up here somewhere around 22313, and we dropped all the way below 20,000 and around 70. Now that we've determined, okay, we were most likely on a downtrend, we're just facing that downtrend structure, how can we capitalize on that? Well, as we head back down into the 1 minute, I will be showing you guys how I was able to take my entries starting all the way back from 4 in the morning, heading into 5 in the morning where I was already trading pre-market. It was as simple as this. And honestly, this is what I love so much about what? These little EMAs are just golden. If anyone does not have the indicator, it is called Kev_IND. Search it up. This is the style that I have it. This is my 9-day, 21, 50, and 200. When we finally rallied ourselves back up, we saw ourselves get stuck right inside of what? Our EQ kill zone. We can see that right before we closed our markets from post-market, we created our first SMT at these highs inside of our EQ kill zone. So, leaving it off of that, we already knew heading into our pre-market, we will most likely be looking at bearish bias. That's exactly what we continue to have as we were dragging lower and lower, and as simple as using 1-2 strategies, 1-2 confluences of that, we are on a what? Pretty nice downtrend already. We've come back up, so we can already assume that liquidity has been absorbed and EMAs are holding us down. These puts were insanely easy to catch. Then we head into these puts, where I'm looking at this whales target right here, and I'm deciding for myself whether I want to enter in on this or if I want to wait for another types of retracement. But as we see, we break it and we start holding a bit lower. Once I see us come up and reject this EMA again like we did here, I decided to enter and ended up holding for a little bit as a scalp and ended up getting stopped out eventually. As we see EMA hold its level again as it's done the entirety of pre-market, we decide to enter in on these puts. We decide to take it down to these lows and we end up getting out from there. But what do? Once we come back up, reject our 50-day EMA, we decide from there, we notice what volume is going to do afterwards, we start retracing and we end up entering once again. Right here is a level that I wanted to really look out for. Why? Because if we notice at 732 to around 745, we are forming our what? Our first SMT. Right here we can notice that NQ did not make the same sort of sweep that SPY did. Noticing that, that's most likely why we retraced back up. Same philosophy. Our 50-day EMA held us and we were able to drag it all the way down until eventually our LLOD took us out. Now onto the next trades. One thing that I really want you guys to start doing a bit more often that I've noticed has saved me in a lot of ways of recognizing when we're going to drop earlier is if NQ is doing something similar. As we notice here, we never broke past that 0.5 level, and that's exactly what we try to look for, because once we break past that 0.5 level, we have entered a zone of discount, allowing market makers to fill in cheaper puts and allowing them to, of course, then drag the market down. But as we see here, we never made that breach. But what we did make the breach on was on NQ. As we notice, same thing, and we did end up breaching that 0.5, confirming that there was a grab for liquidity. From there, I ended up entering once again. Theta destroyed a lot of my trade. That's why once we finally had that drop down, I put my stop loss right at the top of this high, which I inevitably got stopped out at, of course. And now for our biggest trade. This trade was just beautiful. As everyone knows, 9:30 a.m. is also a crucial point in time that we always want to be looking at. Why, Batnats? Why do you want to be looking at 9:30 a.m.? Because 9:30 a.m. is AM session is being closed off. Most trades are taken within the first 2 hours of market. So this is exactly when we start getting the small pullbacks, retracements, basically just chasing back to equilibrium. But when we have such a steep drop like this, most of the time it can indicate a full reversal coming. So that's exactly what I did. I saw that liquidity was being pulled away once again. I saw EMA getting tested. In my longer time frame bias, that this 9:30 a.m. is a perfect time for a classic reversal. We've been consolidating for the past hour or so. If there's any time to get in calls, it's going to be now. Sometimes you just have to be confident in yourself. You have to be able to look at the chart and decipher, this is what I'm going to be entering. But same thing here. I end up holding it, keep on chasing it until I eventually get wicked out by this, which is strange because we don't have that happen on NQ or ES. But here I end up capitalizing again because I noticed that we are still being withheld by this fair value gap. And if we're going to follow that reversing structure, we need to follow the obvious rules of an uptrend, always coming back to retesting our levels and making sure that we can hold it to push even higher. As we end up doing that perfectly, I noticed that we come up perfectly to the 580 GEX, and what do we see? Immediate volume pullback. That's exactly when I decide, let's set up my LOD, gets broken through, and I'm out of that trade. Perfect. Then, once again, I forgot to mark it out here, but here we have this fair value gap that, yes, might have gotten broken through, but look at this. This breakthrough was also at the same time getting rejected by this 200-day EMA, which is right at our 577 GEX level. So once I saw all of that and us climbing back up, I decided to re-enter once again, and we were able to chase it all the way to what? Our buy-side liquidity, where I was able to form my LOD, re-enter off of the LOD, as some of you may know, chase our 583 plus 584 GEX, and we end up coming up to a 585 where I end up getting fully out. Now, the biggest trade, the trade that literally helped me bank over 1200%, was this final put play. How did I do it and how did I take it exactly? Well, to start off, I knew that we had these SMTs from this level. From 4:42 p.m. we had SMTs on NQ. As we can see here, NQ made that sweep while SPY did not. So I already knew, hey, if there's going to be a time for puts, it might be now. And what are we also heading into? The final 30 minutes of market, which can be very volatile, especially after a very volatile day. That's exactly what we end up getting into. Super cheap contracts, as it was a lotto trade, but we end up banking more than 1200%. So let's figure out how I was able to just continue to make so much money. Number one, you'll always need to identify what? Identify your trend. Perfect. Number two, you always need to be on the lookout for your EMAs. Okay, perfect. Number three, what else could we also be looking for? What time is it? What time is it is so crucial. Is it 4 in the morning? Is it 2 in the morning? Is it 8 a.m. market reversal time? What time is it? It is super crucial that you understand that. And number four, probably one that I really like to look for, especially for a higher time frame bias, what GEXs could we be looking for? Obviously, use your ICT metrics, your SMC, whatever you've learned, but at the same time, make sure you're always looking at identifying the trend, your EMAs, what time it is, and what GEXs you guys could be looking for. I hope you guys had a successful trading day as well, and I will catch you guys tomorrow.